We're starting a couple of minutes after 2 CET time. The webinar is called Renewables Asset Management, a journey through complexity and collaboration for a brave, profitable future. Again, warm welcome. We have a large audience here today. We have about 70 people who have registered, so welcome to each and every one of you. It is also exciting that people are coming from all over. We're coming from all different countries, joining forces here today. My name is Eva Liljendahl, and I work as a sales manager at Delphos Energy. Delphos Energy has the superior asset performance management system on the market. It's AI-based. We call it a virtual engineer. The company is headquartered out of Barcelona and was started in 2017. We are today in 15 gigawatt wind, solar, storage, and hydro assets. And we help and make it happen 18%, up to 18% cuts in downtime for the different assets, and keeping unavailability to under 2%, and increase production up to 6%. So we're very proud of these numbers. The complexity that we are going to experience, hear about today in this webinar actually requires such an AI-based asset performance management system with predictive maintenance. A virtual engineer is actually necessary. This to secure energy production and system health. If you're curious about this, if you're curious about the Delphos platform, please contact me and we can see if there is a collaboration that should happen between us. Contact me via LinkedIn or email, whichever way, and we will have a discussion offline. I'm here doing this job as a part of my commitment to a green planet and belief that we will convert to fossil-free energy production sooner rather than later. During my soon 6 years in the renewable energy industry, things have changed drastically. We're experiencing an exponential growth in renewable energy every day, at a record-breaking pace. Wind and solar energy are primary drivers, accounting for the new electricity additions that are happening today in the world. Some global growth milestones I just want to mention. Renewables generate over 30% of the global electricity today. It's actually, I read, 33.8%. Solar is the fastest growing source, doubling generations every 3 years. Wind and solar pushed renewables past coal as the top electricity source. That was at the end of last year. Investment and capacity trends are like this: $2.2 trillion trillion dollars in investment for clean energy, which is a huge domination over fossil fuels. They didn't even come close to anything like it. We have 140% capacity surge, and this is renewable capacity that grew from 2015 to 2025. And this, of course, has its reasons. One of them is that this is the most cost-efficient option that we have. Solar is down 99% since the 1970s, making renewables the most cost-efficient of any power source. The reality of the circumstances in which we flourish is what we will address here together today. I wanted to just point to the agenda quickly so that you kind of know what's going on. We have 2 speakers, fantastic speakers that are with me here today, and I will introduce them shortly. And so first it's Kruno Collies, and then it's Per Dunder, and then after that we have a Q&A. And the Q&A will be done via chat. So you will see the question and then you will get the answer. You can use the chat and put in a question anytime. and then it will be shown at the end. If you have technical issues, it's also another reason to use the chat if you wish to. If you're experiencing problems, I would say refresh, go out and come back. Another way to if the problems persist, use a new device. Now I want to introduce our expert speakers that we have with us here today. Kruno Kuljis, he is a former major in the Swedish Air Force, entered energy business in 2006, has had trading and analysis positions in a couple of the biggest European energy trading organizations. Nowadays, Kruno is head of market analysis at Modity Energy Trading, a trading company with expertise and innovative solutions with a focus on sustainability and multi-market optimization in all energy markets for their customers. He will soon start speaking. And the second speaker that we have is Per Dunder, Senior Advisor and Director. He is highly respected and seasoned as a growth leader and board professional. He is driven by a strong commitment to leaving a greener planet for future generations. A senior wind power expert with extensive experience in ownership, operations, and strategic asset management. He brings deep industry insight combined with a proven track record of sustainable business growth. And now the word is yours, Kruno. Thank you for being here.
Thank you, and I'm happy to be here. A pleasure. I will talk about renewables energy trading and an overview of the markets and the weather impact and market regulations. So next slide, please. When it comes to Modity and a complete energy trading, we are a trading company trading on all markets, from financial markets to physical markets. And the physical markets have developed in the recent years to be more and more interesting with the new type of assets and batteries and storage, and together with the renewables, we are now trading on all the ancillary markets and the physical markets, as well as financial markets, to bring value to asset owners and our customers. So next slide, please. As you might have seen lately, the volatility of the energy prices has risen. When we summarize last year, we had an energy price in the northern part of Sweden with an average price of 16 euros per megawatt hours, and the average price on the southern parts of Sweden is up to 60 euros per megawatt hours. However, this year, with a more heavy winter and a crisis in the Middle East, we have seen higher prices and higher volatility as well, together with a hydro deficit that has risen throughout the Q1. So that makes higher prices on average, and nowadays we see an average price in this year in the northern price areas of 55 euros per megawatt hours, and in the southern parts of Sweden up to 88 euros per megawatt hours. And we might see higher prices throughout the summer due to the crisis, and I will talk something about the Middle East crisis later on when I summarize the seasonal weather forecast as well. So next slide, please. Well, weather and wind is certainly the main price driver in the Nordic. As we have seen last year, when the new regulation of MFRR EOM managed to decrease the wind power output due to a more defense production strategy and risk handling the MFRR EOM regime. And that means 7 to 8% less wind to the market to be able to steer up and down, and that is more or less Dunkelflaute in the Nordic due to this new regime compared to previously when the production output was higher compared to the nowadays. But still, the wind is the main price driver in the Nordic, and as well in Germany, for example, driving the consumption of gas if there is less wind. So next slide, please. And how do we then deal with the multi-market optimization? Well, the multi-market optimization as such is when you add new capabilities to the one you have, or you build several capabilities into one asset. For example, wind power, solar power, and batteries and storage are combined, and then you can act on different markets and also have better earning on your assets over time, making both energy and capacity markets available to your assets. Nevertheless, this is more data-driven and higher resolution on the energy market on a 24/7 basis. It needs more AI and algorithm trading using this new markets and new strategies combined with the data-driven technology. Next slide, please. As you see in the prices from last year to this year and the rising volatilities, here you can see last month prices in the northern parts and in the southern parts, SE2 and SE4, how the spot prices and ancillary prices are varying. And you see the spot trading and intraday trading are quite high prices. So you get high revenues if you trade on those markets, as well as the balancing market, which also brings higher earnings. When it comes to the frequency markets, FCR and other markets, they are more or less on a more stable, lower level of the price, as you can see on these graphs. So the recommendation is to trade on the physical markets from the day ahead, intraday, and the MFRR market if you choose just one or a couple of these markets to optimize your assets. So next slide, please. How is then the longer trend of these prices on different markets? Well, in the middle you have the FCR market. It's more or less ended up in a balance. Of course, there is a slightly need for more throughout the coming years, but the FFRR market and the AFRR and the MFRR market are the markets that needs more energy and capacity to these markets, and for that reason, the assets which are trading on these markets will have a better outcome throughout the years to come, also from nowadays to 5 to 10 years horizon. So next slide, please. What are then the challenges for the multi-market optimization? Well, next year we are entering a new gate closure time regime to be able to trade more into delivery. Nowadays, the intraday market is closing from 60 minutes to delivery, and this will be changed from 1 year on to from now in 2017 during March. The Swedish TSO will change the regime to be able to trade 30 minutes into the delivery. So that will be better for renewables to deal with imbalances and changes on outages and so on to be able to trade and balance your assets, but also using the arbitrage between 1 hour or another, or from a couple of hours to delivery, to be able to deal with these changes of the market. We are also entering a new regime with the Mari and Picasso on the AFRR and the MFRR market during next year, and the market changes there. Of course, you add some new liquidity to the market, opening a platform for neighboring countries to join. But since neighboring countries are facing higher prices and also a higher floor and roof on these markets, the volatility will most certainly be the same as we have now, or even maybe a little bit worsen to entering those spike of plus and minus 15,000 euros, which is the preliminary limits of the new market. Today is 10,000 euros in Sweden. But this combined will lead to probably some better conditions, but you still have the risk of high and low prices. As we see, for example, in Germany a couple of weeks ago, we have like minus 500 euros prices, and of course that's could happen also in the future for in Sweden on these markets or on other physical markets. Next slide, please. As I mentioned, the wind is the main price driver. Of course, we have a deficit of 25 terawatt hours of hydro in the Nordic, mainly hydro deficits in Norway, but also in Sweden. However, we think that one of the coming months, or maybe two, could deliver a surplus in precipitation energy in the Nordics, and this month has also started with a wet scenario, and it will certainly remain throughout next week. But at the end of the month, we will get some drier conditions, and overall a quite warm summer throughout the following months, as on average. And I also believe that the driest month could be July, as forecasted, and then turning a little bit wetter at the end of the summer, according to tropical season that is entering, as well as we get forming of El Nino southern oscillation, which also affects the pattern of the low pressure areas throughout the Atlantic, reaching the Nordic region. So a surplus for a couple up to 10 terawatt hours during the summer might be the scenario. I also marked the price impact on these scenarios. Of course, in Europe, you see a warm summer with heat waves. Recently, we have heat waves in France and UK reaching record high temperatures for May. Certainly, we will have some more heat waves during the summer. The start of summer, more of a Iberian Peninsula, that's the western part of Europe and the central part of Europe. And later on, the summer more central to southeastern part of Europe, with the Balkans and Greece maybe facing some forest fires and dry conditions over southeastern parts of Europe later on this summer. So a big temperature difference from southern part of Sweden, southern part of Europe, or northern part of Sweden, northern part of Europe, could also bring some extreme weather conditions and heavy showers, maybe some floodings as well, mainly over or slightly north of the Alps, where these frontal and temperatures are gathered, and you face the risk of extreme weather over central parts of the continent. So, next slide, please. What's then happening later on? Well, as I mentioned, the forming of the El Nino, facing some more northerly tracks of low pressure areas. So the autumn and early winter probably will be quite mild and bring up some surplus of precipitation energy and wind power production as well in the Nordics. We are facing a rather normal tropical season this year, mostly according to the El Nino conditions and the wind shear that makes over the southern parts of the US and the Gulf region, disturbing the forming of tropical hurricanes. So for that reason, just a couple of major hurricanes we'll probably face this season, but an overall of up to 15 hurricanes named hurricanes during this season. However, in the Pacific, where we have the mild sea surface temperature due to El Nino, we will certainly face some more tropical hurricanes moving eastward to Australia and the Philippines and southeastern parts of Asia as well. So that region will certainly have some more storms and hurricane during this year, I believe. So then the Nordic will get some improvement of the hydro up to maybe 7 to 10 terawatt hours during the summer, and then additional 10 during the autumn and winter. So at earliest, at the shift from 2026 to 2027, we'll get a normalization of the hydro and probably some less prices and some maybe some hydro and wind-driven prices again in the Nordics. And at that time, we probably will have some more peaceful conditions in the Middle East as well, also easing up the continental prices. However, the deficit of the gas storage in Europe are the main reason for Europe to get higher prices during this year. If we get some colder conditions later on this year, when we are getting closer to the winter, we'll probably get some higher prices due to the lack of gas. If we should get a colder winter from late this year to early next year, the gas will fill up to maybe 70, maybe maximum 80%. But still, it could be a lack of gas if we get the extreme cold winter. But that's not in the cards due to the weather forecast as such. But and then if we zoom out a little bit longer, here is our long-term forecast for next year. And there you can see we have the northern price areas around 35 to 40, increasing due to electrification and the power balance. And then in SE3 and the system price is just below 50, moving down to 45 in 2040. That goes also for the SE4, which started a little bit higher between the system price and the German price of 90 euros, around 60 or above 60, down to just above 50. And the German prices from 90 to 60 to 70 euros when we reach 2040. So there are big challenges in the trading to come also in the future. And then, if I should summarize the challenges that we have in our organization. Next slide, please. You see all the changes and all the challenges that we have. We have lots of demand changes. We have cross-border capacities and policy decisions, geopolitics, as you've seen lately, like Middle East. We have Ukraine and Russia. We have high resolution trading. We have grid constraints and weather conditions, and the renewable generation. And together with new market regulations, such as flow bites, for example, that's lots more of challenges that we have to deal with. And how do we deal with all these changes? Well, we have to adapt. Adaptation is one of the main drivers for us to be in the front seat of all these changes to see how it affects us and what impact does it have on the markets. To be able to cover all these areas, we need cooperation and collaborations, and of course, system support and AI support is one of my main things as well. To be able to continue serving the markets with sustainability and more renewables on the market, to support them with a multi-market optimization. So that's all for me, and I hand over to Eva and Per to continue. Thank you. I think you're mute, Eva.
Thank you. That was a good idea before. So thank you, Kruno, for a wonderful presentation. We will pass on the microphone to Per Dunder.
Thank you, and happy to be here. Thank you for inviting me. I will talk a little bit in connection to where Kruno left off, quite a lot about adaptation and how to face the new world within renewables. globally, we have a situation that hasn't been seen for, well, never, to be honest, because the long-term transition narratives, the plans we have had for a long-term transition into more renewables, have partly been changed into handling immediate structural press and stress. We have a fossil fuel market that is tightening, driven by geopolitical disruption, the Strait of Hormuz as one, naturally. At the same time, we have an electricity market that in certain regions have an oversupply. Certain regions have been very successful in growing renewables and created oversupplies that we need to handle. And also we have a very, very rapidly accelerating investment scenario when it comes to storage and flexibility and grid resilience. So that is the situation globally that makes our world a bit uncertain. Next slide, thank you. And when we talk about the electricity market per se, we are affected by the scarcity of gas and fossil fuels, and we also need to handle these opposite challenges with oversupply. Oversupply creates negative prices, and negative price events are becoming embedded in our power markets. Germany has already experienced a peak value during 2025 in negative price hours, for example. So flexibility solutions are needed, highly requested, but of course they also need to be planned and developed. But what we can see now is that there is a lot of investments in both batteries, but also in smart grid solutions and so forth. Next slide, please. So the future that awaits us will increasingly depend on flexibility. System integration will be a necessity and needs to be very much developed. And that at the same time as we increase the generation capacity. And creation of new production capacity is also supported by the fact that the capex, or the price tag for new renewable production, is decreasing. A wind turbine from 2026 could be as much as half the price from a turbine just 1 year prior to this. So there is a rapid decrease in pricing. And we also have markets that are affected by the policymakers, the governments, the politicians, that are trying to seek a stable investment incentive. That has been a problem amongst other countries in Sweden for quite some time now. Next slide. So where we have these differences in regions, we also need to combine it, as I mentioned, with a totally or a overall increasing demand to grow the production capacity. And this means that we have regions with scarcity of electricity, and we have regions with an oversupply, and that will keep the volatility, unfortunately, going. We expect the energy demand in total to be doubled by 2040, which means that if I refer back to what Eva was talking about in the beginning, the renewable part of energy production will need to up to fourfold until 2040. So it has to increase by 3 to 4 times. So we need to combine these imbalances with an increasingly growing renewable asset. Next slide, please. When it comes to Europe, the key priorities at the moment are how to improve interconnections, how to improve transmission capacity, how to handle the balancing capacity in the regions that we talk about, and combining that with expectations on an increased capacity, and also handling this within a security network due to the stronger threats from the surrounding world. So I would say that Europe is pointing at resilience as the first and major point of prioritization. Next slide. If we want a profitable future for renewable energy production, and we do, because a profitable future will also be a future that will come true, we need to be in a very good control of the specific operational data in order to interact with the markets that was pointed out by Kruno earlier, and also in order to secure the profitability of the investments made. It's absolutely important to have accurate and relevant data. And that is the foundation for the decisions we need to take, both in short and long term. We also need to have the ability to control and regulate production on a 24/7 basis. There are still markets where office hour-based regulation and monitoring could be sufficient for a short time. But production needs to be ongoing 24/7. Regulations will have demands 24/7. So that ability to work 24/7 is also a key, as is a strong collaboration with technical and commercial expertise. I would assume that asset management by itself would be a growing skill set and a growing profession in the future, because the expertise that knows both commercial and technical side will be a necessity for wind farm investors. So the three words to remember is data, control, and collaboration. This together will be the key to a profitable and sustainable energy future. Next slide. What we also can see is that the allocation of capital being invested is favoring at the moment battery storage, grid infrastructure and capacity, flexible generation, could be hybrid solutions, for example, the cross-border interconnections, and also the cross-border market facilities, which was commented by Kruno, and of course, AI-driven optimization technologies. This is where the money goes at the moment. Next slide. So where does all this take us? Where do we go from now? Well, in short term, I would say follow the money. On the prior slide, we just noticed that the biggest investments are now prioritizing flexibility, storage, and of course, AI investments. So follow the money, because they will show us where to invest and where to prioritize. We also need to manage our assets in a new fashion. Hybrid was mentioned, and with hybrid, we could have a more stable energy generation over the 24 hours of the day, or over the year, or over the month. We can expect volatility. And volatility is not only in the market by itself, but it will also be in the policy making. The governments will be volatile in their decisions around energy. We can also see that interconnection and collaboration is key. And if we are able to monitor what we are doing in a good way and manage assets in a good way, we can convert the losses of today to the profits of tomorrow. Next slide. So my conclusion is, or let me say, the way to wrap this seminar up from my side is that the organizations that are skilled in capturing data and navigate through volatility, to work in a flexible way and being able to adapt to the regionalized market that we have, will be best positioned to capture the long-term value. Hopefully, we will talk again in this area soon. Thank you so much. And you're on mute, Eva.
Thank you both, Kruno and Per, for two excellent discussions, even though they were done by one person at the time. They were discussions in my mind. They were statements and they were questions, and there were statements and there were questions. The best way of spreading knowledge in an area. Anyway, we have now time for Q&A. And so we have a question that has come in, and it is, what do you, so it's supposed to come up here, but anyway, I will read it to you. What do you expect the Nordic power prices to be if we see a normalization in the Middle East? And who is better to answer that but Kruno?
Well, thank you, Eve. I just touched it in my presentation, and well, the market prices nowadays are around 50 to 60 euros per megawatt hours, and more or less on a system level for the front quarter and the next year. So I should say, like Q3, around 60 to 70 euros, and the front year from 50 to 60 euros. So depending on how the peace talk goes in the Middle East, and we also have the Ukraine and the increase of renewables as well. As I mentioned, also the summer will bring some less wind to Europe and to Germany, ending up with a price level of around 100 euros, maybe 100 to 120 during the autumn and winter, if there is no peace in sight. However, the autumn and winter bring some windier weather to Germany as well, and we'll probably see some lower prices, let's say from 85 to 95 during next year, and maybe 5 to 10 euros higher on the Q3, Q4 calendars, due to increase in demand. But there is a risk of August, when there is outages on the nuclear, and heating demand is very high in Europe. So we might see some spikes hitting late July and August this year, and also due to the lack of hydrology in the Nordic, some higher price in the southern price areas due to less wind during July and early August, I believe, in the Nordics. But on the longer run, probably some lower prices due to more peaceful conditions in the Middle East and increase in hydro in the Nordics.
Thank you, Colonel. Excellent. We will actually do one more question. We're going over time just a little bit. I hope everybody is good with that. We have an excellent question here. What is your view on continued growth of renewable energy production in reference to present problems with an energy surplus? And this question goes to you, Per.
Yeah, well, I will make it as short as possible. I think that the renewable energy production will need to increase, as we can see globally, and in the forecast for 2040, it needs to be tripled or maybe quadrupled. So I think there will be political incentives to keep this growth going. I think there are two different issues, really, because the imbalance within regions and therefore the surplus needs to be handled in other measures. So I think this will not affect, not mainly at least, will affect the continued growth. I'm optimistic about the growth.
Yes. Thank you, Per. Excellent. And we will wrap up. Thank you, everybody, for being here. We appreciate the interest that we have seen. What will happen now is that you will get a package in the mail, and there you will get this very presentation. So you will have a recording that you can share with colleagues in the industry. And you also will get the presentation so that can also be reused, of course, and looked at again. And we also are putting in a poll. It was our idea, and especially with seeing the interest being as big as it was for this particular webinar, is to make this into a series. But in order to do that, we would like it to be on a little bit, we want to hear what you want to us to dive into. We can dive into many subtopics on this large topic that we have handled today, and we would like to do that, and we would like a little bit of direction. So where are you enthusiastic? Where are you curious? What would you like to know more about? And we will follow your lead. So please answer the poll, and we expect that we will have another webinar, hopefully in September, and see you then. Thank you. It's been a lot of fun. Bye.